That is
All
true.
right, here it is, 12 o'clock. So we're going to go ahead and kick it off. My name's Tabitha. I'm the State Outreach Coordinator for New Hampshire Natural Resources Conservation Service. Welcome and thanks for joining to our second session of the Jumpstart Your Farm Business with USDA in New Hampshire. So we are all New Hampshire staff here to share program information with you. Today we're going to be covering the Risk Management Agency opportunities, deadlines, and sources of funding for the local residents of New Hampshire. So I'm going to, before I turn it over, actually, we are recording this session. It will be uploaded to the New Hampshire NRCS YouTube page, and I'll drop a link to that in the chat. If you have any questions, comments, concerns, please raise your hand or drop them in the chat as well. As an attendee, you will not be able to unmute yourself or turn on your video. We can do that for you if you let us know that you'd like to interact. Otherwise, please enjoy the presentation and feel free to tune into our YouTube page. Check out our YouTube page to see the first recording that we did last week as well, which was a broad overview of the Natural Resources Conservation Service, Rural Development, Farm Service Agency, and Risk Management Agency. So without taking up any more time, I'm going to turn it over to Will Barnes. Thank you.
Thank you, Tabitha. Like I said, my name is Will Barnes. I'm the Deputy Director of the Raleigh Regional Office for the Risk Management Agency. Just a little background on me. I've been with RMA since 2018. I've been with USDA for 15 years. Prior to RMA, I worked for the Farm Service Agency in Middle Tennessee. That's the road behind me where I used to come from. I'm now in North Carolina where our office is. Here. Been something like a farmer my whole life. We had cattle when I was growing up. We do not anymore. Farming is a tough business. And I, University of Tennessee, studied animal science, got my master's in ag business there. So I've been around. I've done a couple of things, and hopefully, what we present to you today is a good overview of crop insurance in the country, what's available in New Hampshire, and however y'all want to do it. I think asking questions in a text box as we go is easier, and I can address them towards the end. We've got a full hour, and I do have a hard stop at 1 o'clock. I'll have to jump, but do the best I can to answer questions. And all right. Well, thank you. Thank you all for being here, and we'll roll on. So just a quick overview of RMA. We'll start with who we are and what we do, what crop insurance is in the country, what our office does as a regional office, the types of insurance plans that are available to you, and nationwide. A couple of details on beginning farmer and rancher for those that maybe didn't see it last week, and then New Hampshire at a glance, as far within the agricultural sector there, what crop insurance has done. So RMA serves, basically, we work on risk management through crop insurance. So market-based risk management tools, adjusted for weather, adjusted for the best we can. Basically to promote economic stability. Pretty much all of the USDA offices that you're going to deal with specifically deal with the economic prosperity and stability, especially in rural areas. And I know there's a lot of rural areas in New Hampshire. I've been up there a couple of times and would like to retire there someday if possible. So y'all keep your eyes out for me. Now, crop insurance is government developed and supported. It's subsidized by the U.S. government, and that's why we're involved. It's a public-private partnership. It's sold and serviced by private insurance companies. Those are called AIPs. I'll get to that. There's about 20 of them nationwide, the companies, and then individual agents. There's close to 1 million nationwide. They will sell for one company or two companies. They're allowed to sell for multiples. But they will actually sell and service the product. excuse me, I have been fighting something like a cold, or we're in full blown spring down in North Carolina, so it might be the red maple got me. Crop insurance is here. It was born out of the Dust Bowl. It was actually born out of AAA Act of 36. If anybody's much aware of that, it expanded a whole lot in the 80s, because in the 30s it was developed for 3 crops. Nobody has to guess. If you want to guess, you can, but it was just corn and wheat and soybeans. In the 80s, they started adding a significant amount of crops to it. In the early 2000s, they bumped the subsidy up quite a bit. The goal is to create a financial backstop, just like any other insurance is, so that you won't lose everything when adverse actions happen. And farming is something bad is going to happen in your farming career. That's farming. So now these just a few things. Generally, natural disasters, your crop insurance protects against that or covers that through indemnity purposes. Flooding, wildfires, hurricanes, droughts, excess moisture, extreme heat, volcanoes. We don't have a problem with that on the East Coast. And then also, depending on which crop insurance, market downturns, economic issues, revenue losses, when just depending on the policy you have, and the prices. If the prices go bad, your crop insurance can protect against that as well. Crop insurance, like I said before, the corporation has all the money. So the Federal Crop Insurance Corporation, written into the Farm Bill, and all the money runs through them into RMA. Now, we're what you'd call a micro agency. There's around 300 of us nationwide, so we're like a small high school. We do know everybody. Bill here, Bill Ferris, also here. He knows lots of people in the agency. We end up knowing everybody. So we're not quite as big as NRCS or FSA, but RMA services. Provide service to the AIPs. Those are approved insurance providers. Our agreement is with them. So we will work with producers, we will work with agents, but ultimately RMA's agreement is with AIPs. But we always need input and output. We need to do outreach. We need to make sure that everybody is aware of what is available and how insurance policies better. Just quick overview on the cycle. We are currently, for spring crops, we are in the application process. We're around 3. Most things in New Hampshire, you might still be able to get some stuff in. This may be a presentation for later in the year for you, depending on what you are growing. After the application process comes coverage and billing. Billing always comes at the end of that cycle. You create your coverage. If there is a claim, you would bring out a loss adjuster. They would review your crop on the year in the field or in the bin. Just depends on what kind of crop it is. Excuse me. After the claims process, we'll go in, and if we need to make any changes, we will make changes annually if we need to make that, to strengthen that policy. And that's part of RMA's job. RMA is organized into 3 grand divisions. Product management, they're entirely out of Kansas City, although some do work remote at this point. They actually build and test crop insurance. That's where our statisticians and our economists are. They try to make sure that run models to make sure that it's going to be a cost-effective policy, because we are a steward of your tax money. And compliance, safeguards crop insurance. We have a compliance office next door to us in Raleigh. They'll make sure that the fraud is limited or nil, if possible, that there's no waste or abuse. Recommend changes should they see that there's enough loopholes in a policy where a lot of people are manipulating something that's not necessarily illegal, but potentially a problem. And then there's insurance services. That's who Bill and I work for. We make sure that the insurance policies being developed are beneficial to the folks out in the field, to y'all, the producers. We work with to expand. So I'll go over a little bit of what regional offices do. So here we are. Y'all are up there mostly, except Bill is over in Syracuse right now, I believe. And I'm down here in North Carolina. There are 10 regional offices. Raleigh has the luxury of having the most states. We have 14 states to cover. So we try to get everywhere we can as best we can. Just because we didn't come see you this year doesn't mean we don't like you. But anyway, that's just roughly the geography of it. Most of what we do is program maintenance. It's just ensuring that the program's rates are sound, dates, rates, and yields are working as they are intended, and dates as far as planning date, final planning dates, sales closing dates for when you can buy the policy, the end of the insurance period, which sometimes can vary depending on how long you can keep a crop. It might be a 2-year holdover kind of crop. Figure out which counties, if we expand insurance by county within the country. So if we see that there's growth in a county, but it's currently uninsurable, we can write in an expansion packet and try to move insurance availability into counties where you live. Expand crops in general. And a lot of that is going and doing stakeholder interaction. When we go out in the field and try to talk to folks, I've sat in listening sessions for things like winter pumpkins or winter squash. Currently, there is no policy for that, but we've listened to producers. I've gone to listening sessions for that. That's something that in the future we could create. So we also do outreach. We have some money through what's called risk management education, provided in cooperative agreements, not quite a grant, to give to frequently extension services and sometimes private entities to go educate producers on what crop insurance is. Sort of like what I'm doing now, but we'll essentially subcontract that out. We do go as best we can to work in underserved communities, underserved producers, and in underserved states. Things we do not do, as I said before, we do not sell policies through RMA, and we don't service policies through RMA. So I will do everything I can. And at the end of this presentation is my email. But we'll do everything we can to help you find an agent. But these are just things that we're not allowed to do. Just a couple of, just the one slide on before you buy crop insurance. This is important for anything. You may find that you don't need crop insurance, and that's fine. You may find that FSA programs and NRCS programs work for you. You might be able to get loans or grants through the State Department of Ag. Or RD might be able to provide a little bit here and there, and that's great. But before any farming for anybody anywhere, I would always suggest setting up a farm business plan. Now, if you've got a farm loan through farm loan or even through farm credit, somewhere like that, you're going to have to set up a business plan. But determine what your costs are up front annually. Because we all know those costs change. Fertilizer changes, fuel changes, seed prices change. So figure out if you've got contracts, what your sales contracts are going to look like. Excuse me. Equipment costs and how much it might cost to replace a crop that failed immediately or was prevented from planting. You might not make on something that did not get planted. So these are all things that I would sit down. Typically, extension services do have a blank. I don't know if UNH does. One of y'all might say whether or not they do. I know schools like the University of Tennessee do provide annually, or the Extension Service does. NC State University annually provides about a dozen or so different um, business plans for specific crops. So they try to ballpark economically what each cost is going to be. And now, once you figured that, does the plan adequately manage your risk? You can do a lot individually before you even buy crop insurance. If you're an irrigated crop, then you've dealt with one major risk right there, one major peril, and that's drought. If you've got giant heating units or something in your orchard, then you might say, well, I don't need insurance. I can heat my orchard during freezes if those peaches come early like they did last year. So get into policies and specific types of policies now. Lord, I'm sorry, excuse me. APH is one of the oldest ones that RMA has built. It goes way back. That's actual production history. It's based on your historical production on the farm or what you've carried. It's not necessarily farm to farm. Insurance is as related to you, the grower, and then occasionally attached to the farm as well. So you would select an average yield amongst your historic yield. We establish the prices in this. That's not always as easy to do as you'd like, but we do the best we can to establish the prices in the county for the crop. You would then choose a percent price election that would best fit you. The higher the price you want to insure, of course, the more expensive the policy might be. You can get in catastrophic only. CAT is is 50 and 55. It's the same as basic NAP, which we FSA I'm sure will discuss. I do know enough about NAP to be just dangerous. I did run it when I was with FSA. So, or you can get buy-up coverage. Buy-up coverage gets more expensive, but we can price all that out. We have a cost estimator tool. Yeah, and indemnities occur. You would get paid when production is less than the yield that is insured. So it's a fairly basic, simple type of insurance. We have a lot of crops nationwide that are covered under what's called an APH policy. Specifically in New Hampshire, both apples and peaches are covered under an APH type policy. Those sales closing dates were back in November. When you see SCD here going forward, that is going to be sales closing date. So back November 20th. So if you are in the apple or the peach business, keep it in mind. Let me know. We'll get you some fact sheets. Rolling into the year, these kind of decisions can be. It's probably good to think about it now and then get really geared up as you roll in the end of the summer. Whereas something like corn, which is insurable in New Hampshire, you can take yield or revenue protection. That's YP or RP. Those are the second two oldest types of insurance in the country. Yield being very much older than revenue. They're based also on your historical production. You get price options. Those are based on national prices. CEPP, that comes out of Chicago. So yield protection, you get the price at planting locked in on what the national price is. Revenue protection is the higher of the price at planting or the price at harvest. So if that price drops, that's where revenue protection would come in most handy. And frequently it does. You'll see with corn that it ebbs and flows. A lot of row crops do. So a lot of row croppers always take revenue protection. That's just something that's almost ingrained in them at this point. And revenue protection with a harvest price exclusion is back to the price at planting. You can get those in CAT or buy-up coverage as well. Goes all the way to 75% of the total yield, the total revenue, either one. And in New Hampshire, like I said, corn, for grain or silage. You can insure silage in New Hampshire. And that's only a yield protection for silage. But that sales closing date is March 15th. So that's coming up on us. If anybody here is growing corn. Dollar plan, that's fairly new. It's established in, I want to say, the late 90s. It's also, everything you're going to find is based on historical production. But the guarantees are determined on pre-published values. We'll have a reference maximum dollar amount, which is where the word dollar comes from for the plan. And it takes into account that maximum dollar amount is the cost of establishing the crop. In this specific instance, in New Hampshire, that's fresh market sweet corn. Again, it's cat or buy up, and indemnities will occur when the loss exceeds the deductible. So, a couple of slightly different styles of plans. Those three are the biggest, four, I should say. But we do have rainfall indexes. This is specifically for pasture or hay ground, or apiculture if you're into beekeeping, if you're making honey. It is entirely based on a lack of precipitation. It's available in every county in the country, excluding Alaska, I think, unless they have expanded. But we're not in Alaska, so we don't have to worry about it right now. So we've developed national rainfall grids. It's based on about 120 years of rainfall within the whole country. We pull that from National Weather Service. They're 17 square mile grids. You would select the grids for 2-month intervals. And those grids are based on where your pasture or hay ground is. The value is per acre, so you would buy up however many acres you have. Don't have to worry about it. It does have to have livestock on it, but does not happen unless it's hay ground and you purchased hay policy for a hay business. Excuse me. But I think I've lost my train of thought there. Like I said, the only peril is lack of precipitation, serious drought years. This is going to come in handy. We do have a tool as well for rainfall indexes. You can work backwards in time. I'm not sure about drought years in New Hampshire, but you can see based on our grids when this policy would have paid off, which is fairly handy. Around North Carolina, around Tennessee, I can take this tool and we can say, well, in 2008 it was abysmal. 2016 we didn't get rain between July 3rd and August 31st. Didn't get any rain. If you pick those 2 months, that's 60-day interval. You had 8 weeks at D2 and 22. That's a lot. That's a lot. So anybody with a PRF policy, that would have kicked a payment. And as well, it would have kicked the same for apiculture, for your bees, because bees require, a couple of individual plans to cover. And this, we've made a big push. So I'll go more in depth on both whole farm revenue protection and a new product called micro farm, which is just a smaller version of whole farm with a few less requirements. A whole farm revenue, and I'm sorry, I don't have pictures. I wish I had pictures. They do take up a lot of space. Whole farm revenue is based on 5 years. You will need a Schedule F for your tax returns. It covers revenue from all the commodities on the farm. This generally is based on your tax year. You get a diversity discount, so adding multiple crops in will increase the discount available for your whole farm policy. If a lot of people, with roadside truck stands, stuff like that, they might do tomatoes and they might do sweet corn and they might, do a couple of rows of peppers. And they might do that on the side of a peach orchard. So you can roll all those crops in, and and then just call it a single policy. There's a $17 million cap. I've never seen $17 million in my life, so I'd be kind of nice. And one of the better things about whole farm revenue is you can take NAP coverage on it. Technically, they're protecting two different things. NAP is protecting the crop specifically during the growing season, and whole farm revenue is protecting the total profit, the revenue off of the crop. So you're allowed to take NAP with it. Micro farm, which we started in 2022, started originally with a smaller cap on it than folks liked. I believe the first year was $50,000, and that got bumped up quickly. So now it's up to $350,000 in approved revenue. It's based on 3 to 5 years of Schedule F returns. So not as many years required. It does cover revenue from all the commodities on the farm, excluding timber. I should have put a little star next to that. We don't do timber or anything like that. Don't do show horses. Don't do training dogs. But you find much insurance for such things anyway. You may cover commodities you produce during the insurance period that are not sold. We just estimate a value on that. And you may also insure commodities that you maybe bought from somebody else. So you mostly specialize in maple syrup, or maybe you buy maple syrup to sell on your stand. Then you could cover that under a micro farm policy. And you may also still take NAP coverage. Now the dates for these coming up, the sales closing dates and the application date for whole farm is March 15th. And then for micro farm is April 15th. So not a lot of time to dilly-dally there, but we still have time. So we've got that going for us. The tax records, again, whole farm is 5 years at least. And micro farm is 3 to 5 years, so a minimum of 3 years. May need an inspection for perennials. We do have a couple of worksheets that'll be provided by the AIPs, that whoever you're working with, if you have this policy, allowable revenue worksheet, and then a history report and an intended farm operation report. Like I said, I will. Well, actually, you think it's better, Tabitha, if I answer questions now or wait till the end? I know
I'd say you can go right ahead while we're on this slide. Seems like a simple enough question.
Okay. So whatever, a micro farm is, it's sort of like asking what a farm is. A farm is really anything that produces any commodity that can be sold off the ground. So it's not specific. The only cap really micro farm policy has is that $350,000 maximum revenue, and that's adjusted gross revenue. So it's not net profit. So you'd be able to adjust it down depending on what some of your costs were. But otherwise, it can be, it could be just bees. It could just be honey. It could be a backlot. It could be an urban garden if you're actually making sales off an urban garden. And it could grow as big as, $350,000 can actually cover quite a good sized hay farm. It's probably a fairly small orchard. It just depends on what size you're dealing with. But this would be perfect for something like, we had an 86-acre cattle farm where I grew up, and we kept 19 mama cows and maybe had 10 calves a year if we were lucky. That would probably cover 10 calves a year without any trouble. Actually, back then that was $1.05. It was a pound. Yeah. So I hope that answers your question. And if not, then I can expound more. But must have yes, ma'am, absolutely. Must have verifiable records. So either a disinterested third party or direct marketing sales records. Those are the best things. The square, I've never used a square, but I understand that a lot of farm operating plans have. But like any business, as best you can, if you're selling by the pound or the bushel or however you're selling, you keep your roster sheets as it's sold. Preferably keep the records as separate as you can, so you know where the money is coming from. But that's so sometimes that's possible, and sometimes it's not possible. When you get a run, you really need to get people out the door to get more people in the door. I understand that. Micro farm, you can just use consolidated sales records, so just end-of-day receipts on your register. We'll need to file an acreage report for whatever you're growing. You most, by and large, probably going to do this with FSA anyway, which is so the crop report is due by July 15th for what you have planted. Unless, there's no unless. That's for the entirety of whole farm records. You may or may not have crops if you're working through your FSA county office. You may have earlier reporting dates, and almost certainly do for fall crops. Fall seeded crops, I should say. And then again, as a revised farm operations report, which is that it follows up the basic farm operations report. It may not change, but you may have decided I can't do that row this year, or the seed prices weren't available, or the seeds weren't available, or the price was bad. And so instead I did early millet. Premium billing date for this is August 15th. So in this instance, whole farm, some crop insurance policies will immediately kick a payment, and we would actually take the bill out of the payment, so the indemnity would reduce, but you wouldn't owe anything on your bill. By and large, with whole farm and micro farm, you're probably going to pay the bill before you ever see an indemnity payment. Most of the time, you don't know what you've got until the tax year ends, just in total revenue, and that's the downside of having to figure out what your total revenue is on the farm annually. You can definitely still call a loss adjuster should you have a serious weather event. If something takes down your farm, tornado comes through, tears it all up, definitely you still want a loss adjuster to come out and go ahead and count the plants that are not going to be productive this year. But so how much does this cost? Everybody always wants to know specifically what things cost. I don't blame them. And it depends on your operation. It's going to vary county to county, and what your operation is, what you're growing, how many crops you're growing. You might get the diversity discount. So we do have this cost estimator, which if I have time at the end, I'll run through. We can run it for any crop in the country if you'd like, but we do have just a small example for the county of Hillsborough, New Hampshire. Say a producer had $290,000 in insured revenue based on multiple crops. And the producer premium, which is you, that's the after the subsidy cost. Like I've been told before by many farmers, if there wasn't a subsidy, you probably wouldn't be able to afford crop insurance. Most people wouldn't buy crop insurance if they had to pay the full price. So, quotes will vary a little bit, but for 50% coverage, that's almost CAT. That's going to be the full price, but 50% coverage is $2,300, $2,400, and for something more Cadillac, about $13,000. That's a lot of money, and for sure, there's no way around that. But if $13,000 can save 85% of $290,000, can't do math in my head anymore, but that's around $250,000 if you had a total loss. So that surely means that you'll probably get to farm again next year. Occasionally, we get put out of business on the farm. As far as claims processes, I will get to that. There are discounts. Yeah. So as far as claims process goes, must notify an agent within 72 hours. That's the same rule for NAP as well. You do have some time to be able to file, but you must notify that and you've been a flood. And I know we've had some flooding last year by quite a bit up there. Now, you may not be able to accurately assess what that damage is, but if you feel like you've got damage, it's a good time to go ahead and call that loss adjuster, get on the books, and figure out a time for them to come up and actually see the loss. At the end, a final farm operation report. Then it's due by the sales closing date. If you have no indemnity, if you do have a claim, then you'll need to submit that. That's just going to be your final year end. This is what the roadside stand did, and that's the same for both whole farm and micro farm. We'll pivot just a minute to something more dear to my heart, which is livestock. And not quite yet, but I'll get to that here in a minute. We do have some plug yields as far as, shoot, yeah, I guess I'm being recorded that I'm answering questions that seem like I'm crazy. As far as livestock is concerned, we'll bounce through this. These are available in, and I don't know if we have any livestock folks here or not. New Hampshire, dairy revenue protection, that's DRP. It covers milk, just covers grade A milk. I'll have an extended slide on that. Livestock gross margin, it works very much like a handful of FSA dairy programs have worked in the past. It's the difference between the national CBOT price for livestock or milk, and then the national feed price. Sheep is interesting. Bringing up sheep, we do have an LGM and an LRP for sheep. Those are not currently available in New Hampshire, but that is something that I will mark down. That is good to know. So thank you for that. Okay, and then one of the newest products is livestock risk protection. It's fully revenue. It's based on the CBOT traded livestock for fed feeder cattle and hogs. So that's just based on actual revenue. It's not the price you get at auction on your on your calves. It's the national price. You hit your pounds, and if the price drops below a certain threshold and you had coverage for those pounds, then it would kick a payment. I won't go too deeply into LGM or LRP. They're fairly basic. And if you do want more information, please get in touch with me. I'll be able to sit down and talk longer about it. We'll talk about DRP some, just because there's a lot of dairies in New England. I know it. There's a lot of dairies in New Hampshire. It's an area-based revenue product, entirely based on national milk prices. So the price you may get from your milkman is not actually what's going to pay. It's mostly just a price support tool, or pooled with, I want to say, the East. There's about a half dozen states in New England, running all the way down to, I want to say, New Jersey and Maryland are also included, as far as average milk made per cow per period. That's sold in quarterly coverages. So just quarterly on the year. You can buy up to 5, so you can get into the next year, which some people might do, mostly because projecting milk prices that far out often can make them awfully high, and you may not believe that price is going to hold. You can either get it on class price, which is just classes of milk. I think we run ours on class 3, class 4, or you can get it on component pricing option. If you're a Jersey cow grower, that would be, Jersey milk is going to have that higher butterfat, so that might be more attractive to you, closer to what your dairy is doing. This slide is at least 1 year old, so I don't know if FSA is still calling it DMC, because I know for a while, when I worked it was milk, and then it became MPP. So I think it's still DMC, but if it's not, y'all let me know. But you may be enrolled in it. DMC, good deal. Yes. All right. You may be enrolled in DMC at the same time as you are in DRP. So, and then finally, these are what you'd call endorsements. They're area plans. They are available in dairy margin coverage. That's the words I'm thinking of. So, which is still operating on the margin, and that's how come you can be in both. So, so for area plans, these can bump up your insurance. They're an endorsement that you would add if you had. It's not available for apples. It is anymore. It is available for things like corn. You can APH or there we go. Genius Barnes, genius. You can bump up your coverage. It will cost a little more, but you can cover up to 86% of your crop revenue or your production on the year instead of 75, which is the top end initially. So that's consider that sort of like the frosting on top of the cake. The policy itself is the cake. You may also tack on something called HIPWE, which is fairly new. It's Hurricane Indemnity Protection. So that's a little bit bigger in the South, where a lot of folks have already just gone ahead and tacked it on. If you're coastal, you might consider it. It's just a tack-on endorsement. It works very much like an FSA program. If your county is hit by an actual hurricane, and if you're either in that county or contiguous to that county, then it just automatically kicks a payment. It just triggers a hurricane payment. It's based on the wind speed, so that wind speed of a hurricane must have occurred over land. And then we have added a tropical storm endorsement. It is a little more complicated. If anybody has any questions about that, please let me know. I'll probably have to sit down with you. So as far as beginning farmer and rancher, as well as veterans, excuse me. So specifically, the benefits for beginning farmer and ranchers, you are exempt from paying the administrative fee for CAT policies, as well as additional coverage policies. The administrative fee is a couple $100, so that we peel that right off if you're a beginning farmer. Also take off an additional 10% of premium subsidy for additional coverage that have a premium subsidy. So if you took a buyout policy and you were a qualified beginning farmer, then we peel some more points off. You are allowed to use previous producers' production history. If you're moving on to a farm that has been worked before and has carried insurance before, depending on what they've done. If you've just bought a roadside garden or taken a lease on a piece of land, and they have had insurance or they have production records, then you may use those if you can get access to them. That's sometimes the hardest part. But and you may have an increase in the substitute yield adjustment from 60% to 80% of applicable T yields. T yield is our baseline running average per crop per county. So I don't really go over what a T yield is, but each crop in the nation will have a T yield by county, just basically of what the ground is expected to make, or what the tree is expected to put out in bushels. The yields are typically a rolling average of the last 10 years. And once you get into long-term production, you can certainly bump up your own yield, and you may not want to use a T yield anymore. But you can use replacement yields in some instances, and that would go to 80% instead of 60, so of whatever the county average is. All right. Everybody's always trying to call me. All right. To be a beginning farmer and rancher, you must be an individual. Business entities may only receive benefits if all of the substantial business interests, SBIs, qualify as beginning farmer and rancher. So And you must not have actively operated or managed a farm anywhere with an insurable interest in any crop for more than 5 crop years or 10 years for whole farm. Um, so now, just the very basics of how do I find an agent? Since we don't, like I said, sell or service policies, you will have to go find an agent. I will click on this at the end after we get through some questions, and we'll just run a quick demo to show you how it works. But we do have a tool. Every agent nationwide is required to list. So we cannot recommend an agent. It's a lot like finding a good doctor or a good barber or a good mechanic. Find someone, talk to several, find somebody you trust, talk to other producers that do take crop insurance. If they like their agent, that's probably a good sign. If they don't like their agent, maybe you want a different one. So, but it's, shop around a little bit, give yourself some time to do that as well. Now, if one is not nearby, that doesn't mean they can't come to you. They also work through scanning and emailing. They'll work through fax if anybody still faxes. They will be the one to have to come to you. They'll send loss adjusters to you. They can send you the paperwork, and you can do that. So just real quick, that's about the 10th time I've said that. Probably my apologies. New Hampshire, just at a glance for insurance in 2023, and so 82 total policies in the state. Believe it or not, that's not the least amount of policies in the country. So congratulations. Most of the money is in corn. That's not unusual, standard row crops, and then milk. So it's 16 million, almost 17 million pounds of milk were insured in the state. 23 different orchards took insurance for apples. Peaches is, as y'all know, was a total loss last year. That loss ratio does not go higher than 10, really. So $574,000 in total indemnities on $575,000 worth of liabilities in peaches alone. It wasn't drought, that it was freeze that caught you, wasn't it? That late freeze. And you always know it's going to happen when it gets too warm, and then it goes hard, cold, fast. Which is why it's awful that we're in springtime here in February right now. So overall, $10.5 million in liabilities in New Hampshire that were covered, and a loss ratio that's really reflective of the kind of growing year you had. Year over year for the 15 years before that. We can back up. So we're at 82 policies in the last year. So 75 fluctuates. Sometimes policies, that you're watching farm consolidation, but indemnities and insured acres, liabilities typically go up. So that's something that we in the regional office watch all the time. Mostly to make sure that we're insuring the right things in the right places. So I'll make sure that everybody who is here today, I can probably I can put this in the chat just so you'll have all the links available. But while I'm doing that, move from this device. All these links are hot. I checked most of them. They're still good. So they should, if you need any more information, is in use. Okay, I will put it in the chute. Yeah. We'll get it emailed out to you. I can't apparently send it while I'm running it at the same time. And the cost estimator, we can go through that. I've got about 10 minutes. And so let me check and make sure that we've answered questions, because this is
Hi, Will. This is Andrea. I just want to
Mhm.
clarify and make sure Marie's question for microfarm
Mhm.
was answered. So you talked about substitute tea yields, but for microfarm, since you're looking for 3 years of Schedule F,
Mhm.
I think that's when she asked her question. Would she be able to purchase microfarm prior to being in business for 3 years?
It's probably not. But Marie, let me get your email if I can. There's it's you might need to run a couple of years, or at least a year or two on NAP. Um, okay, good deal. Thank you for that. Um, so I am not the whole farm specialist, I must admit, but and I'll check on that. But probably not. I would encourage taking NAP for any crop that we don't cover, and there's not a whole lot in New Hampshire, admittedly. Although we do have something called written agreements where we can enforce a private policy through an agent to you through a written agreement that somebody like Bill would write, basically overview and write. But otherwise, NAP might be your best option. But let me see what I can dig
And
up real
Marie,
quick.
we'll be covering NAP. This is Andrea with Farm Service Agency. We'll be, when he's talking about NAP, it's the Non-Insured Crop Disaster Assistance Program. We'll be covering that in more detail on the webinar next Thursday.
Fruit, maple syrup, and sheep. That's right up my alley. That's um. Let's see here. Okay. I will back up real fast. We've just got a few minutes, so let me go to the agent locator first. Let's skip. That's a good looking cow. I may need to minimize my. Stop that. Show. Okay. Now, agent locator. So it did pop up. Now, you won't be the first person to complain, and that's okay. It would be nicer if it went straight to the actual agent locator. You will have to click twice. So it'll open up this page, and then you would go to find local agent. And we'll just say Manchester, New Hampshire. And we will say all. And we will say within 50 miles and search. Okay. So there appears to be 3 agents within 50 miles of Manchester. And the greater you go, like I said, they still have to come to you. So don't let distance be an issue. 100 miles, you find somebody in Maine. Like there's 4 pages of folks. So good to know. But it's as easy as that. Phone number should be up to date. Give them a call. Tell them about your business. Tell them what you want to do, how much you want to insure, or just the basics of your operation, and see how that can work. We'll bump back here, and cost estimator is going to take quite a bit. All of this information that I provided, and like I said, I will provide the. In fact, I can do it now, and anybody can just continue to ask questions. So I can stop sharing this. Close that, and then I can attach the thing that the whole presentation. So, and feel free to talk now.
Yeah,
if anybody-
thanks, Will. While you're doing that, I'll go ahead and remind everyone of our upcoming session information. So next week, as Andrea mentioned, the Farm Service Agency will be covering their program information and upcoming deadlines. And then the week after, March 7th, and these are all at the noon hour. March 7th will be rural development programs. And then March 14th, you'll hear more from me about the Natural Resources Conservation Service programs. And I might even invite a few more special guests. So please join us. I dropped information on registration into the chat. And all of our recordings, again, will be on the NRCS New Hampshire YouTube page. Please reach out to any of us as you'd like. We all are here to help you, and we're happy to take questions and comments. Thank you for joining us.
Thank
In
you
the
for
last
having
5
me.
minutes too, I have enabled microphones for any of our virtual audience. So if they'd like to ask a question audibly, you're more than welcome.
Yeah, happy to hear from you. You now have control of your microphone. Thanks, Jeremy.
I just wanted to say thank you. It was good information because we're totally newbies, and just it also hits home how much we definitely need to track everything that we do for the next few years. So,
Which
Good
county
night.
are you in, Marie, if you don't mind me asking?
Cheshire, southwest corner.
Okay, we have an office in Walpole for the Natural Resources Conservation Service.
Great.
So happy to help you there if you'd like to visit your local office.
Yep. And we did have and I'm always messing it up, NRCS person come over and talk about all of those programs. So we have to get registered with the FSA so that we can get started on that.
Oh, great. I'm glad to hear it. We do have an upcoming funding deadline of April 12th for NRCS. So please consider applying there for any applicable practices.
Yeah, we have to get some sheep out there first.
Okay.
Before they'll give us any money, we actually have to start. So
Yeah.
thank you.
Just out of curiosity, what kind of sheep are you going to raise?
I'm really looking into the Shetlands because fine fleeces are important to me as a spinner, and you know, I think I can help rile up that market around here, which I think is lacking. And they're easier and hardier.
They are hardy. They are hardy. Yes.
Yes. So,
Well,
but
good
they're
luck
small.
with it.
Thank you.
No, absolutely. And I'll let me dig up, and I will be in touch with you shortly.
Okay.
And again, I've got to jump off, but I appreciate everybody. So and my email should be on the back end of that presentation. Should anybody need anything, just send me something, and you know, we, like you said, we're here to help. That's why we get paid. So, all right.
Well, thanks, Will.
Thank you. Bye-bye.